Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 20th of April 2020, and yesterday we published a video entitled, Why Haven't Gold and Silver Prices Skyrocketed Yet? And on Saturday our Gold and Silver Weekly Update for the weekend in the 17th of April. We highlighted in both of these, and particularly in yesterday's video, why gold prices, though having performed well, have not reached those levels many were hoping for, and pumpers fantasise about. We also highlighted why silver will continue to lag gold, at least in the short term, and we've placed links to both of these in the description box below. Now, the time of producing this video podcast is 12:40 GMT plus 1, and the main news this morning is the dramatic fall in oil prices, especially WTI Crude, which at this moment, the May futures contract is down $5.42 at $12.85, while Brent crude currently is down $3.95 at $26.97. It's been quite a while since we've noticed this disparity between these two prices. So let's take a brief look at excerpts from two articles published on Bloomberg in relation to what is happening with WTI. Bloomberg article, dated April 19, 2020. Headline: Oil in New York plunges below $15 as storage sites fill. Oil plunged below $15 a barrel in New York, a fresh 21-year low, as inventories soar because of the supply-demand mismatch. The most immediate West Texas Intermediate contract fell as much as 22% to $14.19 a barrel, while a major part of the slump is because the May futures contract expires on Tuesday. The collapse nonetheless reflects a fast-growing glut of oil and rapidly expanding stockpiles in Cushing, Oklahoma, the American pricing hub. As WTI futures have tumbled, it has opened up a discount of almost $9 a barrel to the June contract, to which most trading has now transferred. Buyers in Texas are offering as little as $2 a barrel for some oil streams, raising the possibility that American producers may soon have to pay customers to take crude off their hands, particularly as landlocked producers struggle to find homes for their oil. Crude stockpiles at Cushing, Oklahoma, the key U.S. storage hub, have jumped 48% to almost 55 million barrels since the end of February. Energy Information Administration data show. The hub had working storage capacity of 76 million as of September 30th, according to the EIA. The 9.7 million barrels a day of production cuts agreed by OPEC Plus are paling in comparison against this backdrop. China reported its first economic contraction in decades on Friday, an indication of what's to come. Quote, There is no limit to the downside to prices when inventories and pipelines are full. Negative prices are possible. I'm not saying it will happen. If it does, it will be very short-lived, unquote. Hedge fund manager Pierre Andurand tweeted. End of article. Bloomberg article dated April 20th at 9:35 a.m. GMT plus 1. Updated at 11:29 a.m. GMT plus 1. Headline: U.S. futures decline while oil plunges below $14. U.S. equity futures fell alongside European and Asian stocks on Monday. Treasuries rose with the dollar and oil plunged. Contracts on the S&P 500 slipped after American stocks posted the first back-to-back weekly gain since early February. The Stoxx Europe 600 index fluctuated before turning lower, with energy companies slumping as the price of oil took another leg down. West Texas Intermediate crude tumbled below $14 a barrel to the lowest level in 21 years. Shares retreated across much of Asia, though the benchmark in Shanghai rose. The euro fluctuated while the pound and the yen weakened. European bonds mostly dropped. Governments and policymakers are continuing attempts to limit the economic damage. US lawmakers are moving closer to a deal to top up funds for small businesses. China pledged more stimulus as banks lowered borrowing costs, and European officials are discussing creating a bad bank for the region, according to the Financial Times. End of article. At present, most European markets are down around the 1% mark, while Asian markets closed down a similar percentage in most but not all cases. The dollar index has strengthened 0.20 and is just shy of that benchmark 100 and is currently 99.98. That's how close it is. Gold is unchanged at $1,685, that's $1,685 an ounce, though it was down some $23 at one stage this morning. And silver is down just 1 cent at $15.20, though it too was down lower this morning, some 14 cents. It's important to remember that for many industries, low oil prices are beneficial, especially for haulage companies and those reliant on goods transportation, not forgetting mining too. However, the US shale and oil industries are so vast and employ so many people. These prices are simply ruinous for those companies, and they do make up a reasonably sizable part of the various stock market indices. To add to the pain is the fact that we're now entering companies' reporting seasons, and with oil demand down, with OPEC and the IEA, the International Energy Agency, forecasting even lower consumption forecasts, it's not going to be difficult to predict that these figures will be disastrous. Germany was already on the brink of recession, partly due to the trade tariffs with China and EU-US tariffs looming. Japanese exports declined the most in nearly 4 years in March, as US-bound shipments, including cars, fell at their fastest rate since 2011. And we've already reported on what's been happening in the UK and Europe in previous recent videos. According to Reuters this morning, the oil industry has been reducing output swiftly to counter an estimated 30% decline in fuel demand worldwide. Production cuts from OPEC and allies, including Russia, will take effect from May. The OPEC Plus group has agreed to reduce output by 9.7 million barrels per day. Officials, though, in Saudi Arabia forecast global supply cuts from oil producers could total nearly 20 million barrels per day. But that includes voluntary cuts from the likes of the United States and Canada, which are unable to turn production on or off in the way that most OPEC nations can. So, no end in sight for now, and perhaps even lower prices on the horizon. Of course, these prices cannot last at these levels forever. But that said, it will be a brave man or woman to predict where the bottom will actually lie. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. Not forgetting that we update our Richard and Greg channel every few days, and we have actually produced and published a video on that one this morning. So please, whatever you do, do not miss that one. And finally, later in the week, we shall be updating our Trump for President 2020 channel, which, to be fair, has been somewhat short of videos of late, for obvious reasons, in that we did not wish to make too much political capital out of the current situation. Nevertheless, the United States election looms, and therefore we think it now appropriate for us to start reproducing some videos on that channel too. And they will appear later in the week. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.